Welcome to the January 29th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. And on the daily chart, we're looking at the 5, 10, and 20-day EMAs and a 50-day EMA, and the 200 AMA down here, and a relative strength line, which is a ratio of whichever chart I bring up versus the S&P 500. And we have volume here with a 50-day moving average. First, we're going to go through a few broad market averages, then we'll cover open positions in the model portfolio, and finally we'll take a look at a few patterns that could be in play if when broad market conditions settle down. First up is the Nasdaq Composite, which followed through on Monday's bearish hanging man candle. And this ugly action on 127 closed this gap. And then on Thursday, the price rallied and stopped just shy of the prior day's high. But interestingly enough, closed below the 10-day EMA for the second day in a row. And a break of the 20-day EMA in the Nasdaq Composite without a quick recovery back above would suggest that this index is in need of a few weeks of chop. On the S&P 500, showing a bit more relative weakness as the price action is below the 20-day EMA. There was the hanging man on Monday with follow through on Wednesday, which also broke the 20-day EMA. And on Thursday, the price action rallied, stalled just shy of the prior day's high, but also closed right at the 20-day EMA. And we're possibly seeing a change in character here as the S&P has held above the 20-day EMA for the past few months and is also looking like it may need a few weeks of chop. IWP, which is the iShares Russell Midcap Growth Index, we monitor this ETF because there's a ton of stocks in it that we like to trade. This index has had quite a bit of distribution over the past few weeks. Also had a hanging man-like candle on Monday, which followed through to the downside on Wednesday. With the decisive break of the 20-day EMA, we also now have the 5 and 10-day EMAs rolling over. And IWP rallied into resistance of prior swing lows and all three moving averages here installed. So now this is 2 days below the 20-day EMA. So the odds have increased for a few weeks of chop. But as you can see, it's already pulled back into the rising 10-week MA. So possibly we see a few weeks of chop in this 101 to 106, 107 area. On to long positions in the model portfolio. We are long CGC with a half position from just over 34. We're up about 17% right now on that half position. NEO we actually stopped out of, but we'll continue to monitor due to this nice reversal on Thursday. Not much volume behind the reversal though, but we'll continue to monitor the chart as we may want to get back in above 60. We'll have to see. TDOC, Teladoc, we're long from an entry in this 225 area. We sold partial position on 127. And we're still long right now with a gain of about 15%. As for stocks that we are monitoring on the long side that could be in play, depending on market conditions, JMIA, which prior to the market breaking down was a pretty strong stock, and it broke out to new highs, but it stalled the past few days, unable to take out the 63 area. We like to see it hold above the 10-day EMA on lighter volume. And then depending on how the market acts over the next few days could be in play. LQDT was an explosive mover off the 50 EMA with a double in just a few weeks. Tried to break out on 119, but has been a victim of a weak market. Also potentially in play over this downtrend line, possibly over $20. That's if the market cooperates. FUV, also interesting over this 24 area for a pop with a little help from the market. ONEM, Recently broke out to new highs, but stalled around 55 and has pulled back since. We look for a break of this downtrend line as a possible buy entry. Again, with some help from the broad market. Maybe we see a few days of chop here and then a potential break of this downtrend line on a pickup in volume. SOLO, which has been in chop mode ever since an explosive move up. It's gone sideways for a few months. Look for a break of this downtrend line around 828 or 30 as a potential buy entry for a pop. And the last chart of the night is a bull flag-like entry after an undercut of support. The price reversed back higher and has formed the bull flag-like pattern. SI could be in play over this short-term downtrend line, looking for immediate follow-through. So just a quick recap. We have a breakdown below the 20-day EMA in the S&P 500 and IWP. We're seeing money flow out of growth stocks the past 2 weeks and heavily this week. So for our style of trading, it just doesn't make a whole lot of sense to be heavily invested. If you're long a few stocks that are holding up, that's fine. Obey your stops or tighten up those stops. But overall, it's probably best to lay low during the next few days and see how the market reacts to recent selling and see how it closes on Friday. Thanks for joining me, and we'll see you again next week. Have a great weekend.